Well, I guess I would start by saying that Howard Marks is more than just another voice. He's probably the most respected investment writer in the country, maybe even in the world. And I think the point that he was trying to make, which was most relevant to what I do, is he was saying, envision how much exposure you're going to want when this is over, and then start slowly. So Howard is not saying this is the bottom, and I think he goes to great lengths to make that clear. And I think that that's very useful to investors who have an asset allocation as the way they manage their portfolio. And just this idea of you don't have to buy the bottom, you can buy a bottom. And if that bottom turns out to be the bottom, well, that's terrific, and markets continue to go higher. And then maybe your biggest regret is that you did nothing and didn't buy. But if it goes lower, you're ready to continue to do the same thing. So we've been talking about that for at least 2 months now. I think it's highly, highly important for people to understand that that is how a professional investor versus a newsletter person explains what they're doing to clients.
Mike, what do you think?
Yeah, I mean, obviously, I agree. It's a good reminder that, first of all, give yourself permission not to actually try to think you're going to get the perfect buy moment in there, because it's pretty much luck, and it's just kind of bragging rights, not really tangibly important. But also that when prices come down, a cushion gets built underneath valuations. In other words, risk comes out of the market. So when you go down 34% in the S&P, when high-yield bond spreads go from 3.5 percentage points to 10.5 in a month, which is what happened, then you're probably likely to get stuff that's mispriced in your favor as opposed to not.
Meantime, Morgan Stanley making the case for a rally in auto stocks. Phil LeBeau's got the details. Hi, Phil.
Hey, Wilf, this is the reason we're seeing the auto stocks, almost all of them, move higher today, because of the optimism that we might eventually see Congress push through some type of a stimulus package that would spur more people to go out and buy new vehicles. And by extension, that helps the automakers. According to Morgan Stanley, you throw out a $10 billion stimulus program of some sort, like a Cash for Clunkers 2, it could spur an increase of 40% in terms of auto sales. Remember, in the first quarter, the pace of sales was 15.1 million vehicles. You're looking at that saying that's not terrible, but remember, it really took a hit in March. In April, the expectation is that this month, fewer than 5 million vehicles as far as a pace of sales. For 2020, it's expected to be in the range of between 10 to 12 million vehicles, not 10 to 20 million vehicles. And again, Adam Jonas at Morgan Stanley says you could make that go much higher, and that's the reason why you take a look at shares of General Motors. It is moving higher today on the potential, the talk that is out there that we could see some type of an auto stimulus package. But again, guys, nothing has been proposed in Washington.
Phil LeBeau, thanks so much for that. Josh Brown, when you see a type of move like that that's kind of binary, you're up 9% today, 22% I think we saw so far this week, and it's based on hopes of a stimulus package. Is that a sign of where perhaps this bounce has gone too quickly?
I would just say my personal take on the auto stocks is that I would be fading any rallies. I think these are companies where stock price hadn't been doing well in the best of times. You had virtually free sources of financing. You had all-time record high sales for autos, and these stocks at best were trading 10, 11 times earnings. Why on earth would I want to own them in the worst of times unless I think there's going to be some radical shift in the way people buy cars and drive, and I don't. So the consumer will probably be depressed in aggregate for a very long time as different professions recover their careers at different rates. So in that environment, you could make the case the auto stocks are oversold, but then I'll turn around and I'll say at the peak of the stock market 2 months, a month and a half ago, Ford was trading at a 20-year low. So almost like, what's the point? Why be an investor in these companies? There are so many incredible places to put your money that are on sale. These stocks haven't done well in so long, I can't even remember.